lot that we have going on with the stock market, but in general, the stock market is going to take care of itself. But what will not take care of itself is going to be your taxes. You see, when we talk about taxes, when we talk about risk managing your taxes, it really comes back down to one aspect: knowing the tax bracket that you're in and the best ways to strategize for the future. And so that's what I wanted to spend just a moment talking about today here, is managing your taxes. You see, when we talk about taxes, I put them into three different buckets, three different categories. So on one side, you have the tax me now bucket, is what I like to call that. That's your taxable buckets. The money in that bucket is taxable on a yearly basis. So consider this income that you have from your work, from your business, any kind of draws that you've taken from your business over the course of the year. All of that is taxable. Now, what else is taxable would be your brokerage accounts, accounts that you have long-term capital gains or short-term capital gains, interest, dividends. All of that is taxable in the year that that income is paid out. Well, we also have then your tax me later bucket. Those are your tax deferred accounts. And the biggest ones there are retirement accounts. So your 401k, traditional IRAs, deferred comp plans that you've put money into over the years and that you're continuing to put money into, pensions. All of that is a tax me later type of a feel for your taxation. Now, on the other side of your planning, you have the tax me never. Those are the tax-free accounts. And specifically, you have the Roth accounts. So think of your Roth 401k, think of your Roth IRA accounts, and think of life insurance. You see, life insurance and certain types of policies are tax-free when you take loans out against them as well. So when we have the different tax buckets, that's going to be vitally important to managing your overall tax feel. Then what happens is we take a look at what buckets and what brackets you're in. So those brackets come back to the tax brackets. You have a 10%, you have a 12%, 22, 24, 32% bracket, all the way up the scale. And knowing those brackets will really help you to determine the best possible outcome for how you're going to be paying taxes today and how you're going to be paying taxes in the future. And so basically what happens here is knowing, let's say if we're going to be jumping from the 12% bracket to the 22% bracket, you're right on that verge. Well, then maybe we need to be making some changes. So that could be some charitable gifting. That could be putting more money aside in that tax me later bucket so that we lower the amount of taxation that's due today. But here's the thing: we don't want to defer all of the tax until retirement or all of the tax until a future year, because your brackets may actually be higher in the future than they are today. And given where we're at on a political level, where we're at on an economic level, there's a very good likelihood that's going to occur. So managing those and knowing where your brackets are, we can keep within a lower bracket. Or let's say we cannot make any changes. We are in that, well, 24% or 32% bracket no matter what, because of the income we've already taken, things we've already done. Well, we can still try to manage that. And now we have a new bracket. Now we can start saying, all right, well, let's take some opportunities to work within that bracket and take some money that's in that tax me now or your taxable buckets and put it into the tax me never buckets. So we can be moving money in and out of your tax buckets based upon your tax brackets. So that is just one vital opportunity that you have to know where you're at today for taxes, where you want to go, and then, like I always say, the gaps that exist to get you there. That's part of the strategies that you can employ to what I call risk manage your taxes. Hope this helped. Hope you had a great Memorial Day, and I look forward to seeing you on the next live stream that we are doing here as well. With that,